Welcome back to Portfolio, everyone. And today we have to talk about the big news that Microsoft is in talks to actually buy the US operations of the fastest growing social media company right now, TikTok. So today we're going to do an evaluation on Microsoft, determine if it's a buy right now with this news and the potential of them going and making a deal to acquire the assets for TikTok in the United States. And we're going to take a look at all the company fundamentals, different price targets for Microsoft, and overall evaluate whether or not it's a good time to buy into Microsoft right now. So of course, if you don't know what TikTok is the fastest growing social media platform in the world right now with over 100 million users in the United States alone. And of course, there are some security risks because it is a Chinese owned company. So Microsoft is working on a deal to acquire the rights to the US assets of the company and have improved the security aspects to keep all people in the United States and their information safe and within the country. So everyone, as you know, I'm the Gen Z investor, and every single day on this channel, we talk about different stocks you can buy, overall stock market performance, and any other big stock market news and headlines. So today we're going to break down Microsoft stock. We're going to evaluate this potential deal they have to acquire the assets to TikTok in the United States and determine how this will benefit the company over the next coming years. So of course, I've mentioned, and TikTok is the fastest growing social media platform. So as of this last week, we heard President Donald Trump state that he was actually going to ban the social media network in the United States because of security risks. So as he said, as far as TikTok is concerned, we're banning them from the United States. That is a direct quote from the president. Of course, Microsoft, though, was behind the scenes working towards a takeover for TikTok's American operations, which gained traction thanks to lobbying from some of the president's top advisors and Republican lawmakers. So essentially, Microsoft is working to create a deal, make an agreement in order to acquire the US assets for TikTok, the fastest growing social media platform, in order to improve security and make sure all user information stays within the United States. It is not sold to foreign governments. And that is one of the reasons why Trump wanted to ban, because of the security risk in individuals' private information being leaked across the world. So Microsoft now has 6 weeks to set a deal. It says it has over 100 million users in the US alone. And Microsoft put out a statement saying they're moving quickly to pursue a deal with TikTok's parent company, ByteDance, aiming to wrap it up by September 15th, which is about 6 weeks away. And they're going to do a complete security review of the company and pledge to keep all American users' data within the United States and sever any connections with other foreign governments with regard to personal data. And of course, over the White House, different lawmakers talked about this potential deal, and how much it will really cost is unknown, but it is rumored that TikTok is valued at around $50 billion for the overall company. But of course, if you break it down, Microsoft is actually only interested in the businesses in the United States, Australia, Canada, and New Zealand, and they're actually willing to take on other American-owned investors to take minority stakes in the bid. So it'll be very interesting to see what TikTok and Microsoft will come up with. And if they are able to reach a deal, I'm sure TikTok will not be banned. And of course, being owned by one of the largest American-based companies can only bring reassurance back to users that their information is staying within their home country. So because of this big news and this potential upside with the acquisition of US TikTok, I believe Microsoft has some potential to see a nice little surge in share price over the next coming months if a deal can get done. So today we're going to evaluate Microsoft, take a look at the overall company fundamentals, take a look at what analysts are saying about the stock and any other price targets for the company over the next 12 months, and just overall determine if it's a great buy right now. So of course, we all know Microsoft. We know the huge powerhouse that it is, one of the largest companies in the world with a market cap at around $1.55 trillion with a T. So Microsoft has continued to grow amazing over this economic shutdown. A lot of their products are actually geared towards a stay-at-home economy. So they've actually seen a huge surge in revenue over the past couple of months. Taking a look at the one-year chart, you can see that they saw March declines, but have fully recovered and continue to reach new all-time highs. Up around 50% on the one-year chart. If we move over to the 5-year chart, incredible share price appreciation, up around 339% over the past 5 years. Beautiful long-term price, of course, with that nice 1% dividend yield along with it. So before we break down company fundamentals and actually talk about where the price may be over the next coming months, we're just going to do a quick overview of the dividend, because as dividend growth investors, we are huge fans of the dividend, especially from these large tech companies. So if we take a look at that 1% dividend yield, which may be minimal right now, but you are getting that beautiful long-term share price appreciation. And of course, Microsoft's payout ratio is only at 31.7%, meaning that payout ratio is so minimal that the company will be able to grow operations, expand the business, and continue to grow that dividend each and every year. And they have a 5-year dividend growth rate at 10.45% on average, just showing that they are raising that dividend at an insane rate of over 10% per year over the past 5 years. And of course, they have a 16-year dividend growth history, which I only believe will continue to grow. I do not believe this dividend is at risk at all anytime in the near future. If we take a look at their dividend safety score, they are actually ranked 99. So they have the highest possible dividend safety score with a very safe ranked dividend. Very unlikely that anything happens to this dividend anytime soon. And I actually believe Microsoft will continue to grow the dividend at over 10% per year for the next 5, 10 plus years. Next, we're going to take a look at is different analyst expectations for the company and how they see the company performing over the next 12 to 18 months. So if we take a look right here at this stock report, this chart shows actual earnings per share versus estimates for the next 2 years. And if you take a look, the estimates for earnings per share, even the low side, are showing big improvements year over year. In 2022, they see a low expectation of $6.64 earnings per share. On the high side, they show $8.20, and the average is 7.33 earnings per share over the next 2 years. So you see long-term growth in earnings per share each and every year over the upcoming years. If we take a look at what analysts are expecting right now and how they're performing and recommending the stock, you can see here that it's out of 35 analysts, it is represented a buy. 13 say strong buy, 18 say buy, and 4 say hold. So of course you can see a strong majority of analysts believe in a buy right now for Microsoft. And how we take a look at how they've actually performed during their last earnings reports, they've always surprised with positive expectations, and they've always beaten earnings by close to double digits each and every quarter. Their lowest quarter was 8.7% growth and surprise and beat of expectations. Meanwhile, all the previous quarters before that saw double-digit earnings surprise and beat, which is absolutely incredible, just showing that Microsoft has continued history of beating analyst expectations. So of course, if they can continue to beat analyst expectations, we may see higher earnings per share over the next coming years than this average. And taking a look at what revenue and how revenue is expected to grow, you can see here in 2018, revenue, $110 billion, up to $125 billion in 2019, 2020 at around $143 billion estimate to finish the year. And of course, you see revenue only growing each and every year. Even the pessimistic, the low, the bearish expectations for revenue growth for Microsoft still showing it increase year over year, which is incredible to see. Moving over, we can see the price target from some analysts value the stock at around $228. They actually raised their price target where it was originally at $196. And of course, even though the stock has seen a run up over the past couple of weeks, they still see more than 10% upside in this high quality, wide moat company because of the products Microsoft operates and owns. Very unlikely that any big competitors are going to come and take momentum away from the company anytime soon. Moving on to a different quality chart, you can see this is from Morningstar, and it's ranked 3 stars right now, which shows the company is actually fairly valued. And what that represents is Warren Buffett's favorite saying is he'd much rather buy an excellent company at a fair price than a fair company at an excellent price. So that shows for people who may think Microsoft is maybe slightly overvalued because of the run-up, Morningstar shows it at a fair value evaluation right now. And of course, like I just mentioned, with a solid blue chip company like Microsoft that has done a great job of growing operations, it might actually be a nice time to buy right now when the company is fair valued instead of trying to wait for an undervalued status because we don't know when that will actually be coming. And if they do acquire the rights to US TikTok, this stock may surge, and this may actually have been an undervalued time right now. We'll have to wait and see. Moving on, let's see how they performed over the past 5 years. So of course, of the past 5 years, just share price appreciation, the stock is up 333%. If we include the reinvested dividends, you can see it's up 378% over the past 5 years, which is absolutely incredible, compared to the overall market, which is only up 71%. So the fact that Microsoft has quadrupled the market performance, which is absolutely insane, and I only believe this stock will continue to go. And of course, as being one of the largest US stocks, it is actually one of the drivers of the overall S&P 500 returns. Moving over to what the future growth of the company may be, analysts are expecting an over 10% annual earnings growth over the next upcoming years. If we take a look, this line right here represents current evaluations in 2020. And as you can see, both lines are showing a nice upward trend. The top blue line is revenue, and the bottom light green line is earnings. So you can see here, over the next coming years, analysts only expect revenue and earnings to continue to grow up very nicely. So that's what you expect to see over the next 5 years, strong revenue growth and strong earnings growth is the expectation. We always have to evaluate more than one analyst when evaluating companies and taking a look at price targets, because of course, even though a lot of analysts and a lot of companies that put out these reports do like an average of overall analyst expectations, if you take averages from different groups, you're going to get different results. So we always like to compare different analyst expectations to overall take a perspective on what people as a whole see for Microsoft moving forward. If we take a look at this website, you can see here, they show Microsoft's price target as a strong buy, 27 are buying and 3 are holding, and a $225 per share price target for Microsoft over the next 12 months. And of course, this is not including the TikTok deal. If TikTok is acquired by Microsoft, I'm sure this price target may get raised into the future. So again, once again, now 6% upside in share price, which is beautiful to see. All these analysts are expecting Microsoft shares to be higher in the future than they are today. And that's exactly what you do when you invest in these type of companies. You put your money in, so long term into the future, your money is worth more than it was today. So that's exactly what you're going to get from Microsoft and these upcoming other big tech giants. And then of course, we have to talk about Microsoft today because of that potential deal with TikTok. Moving into the final part of our analysis is the financial statements. We have to take a look at the financial statements only to show you how the company is performing. Microsoft, of course, has some of the most beautiful financial statements in the world right now. You can see here total revenue each and every year is growing at a beautiful rate. And of course, over the past 12 months, they've generated $143 billion in total revenue. If you take a look at net income, they've brought in $44 billion in net income over the past 12 months, which is absolutely remarkable. 5 years ago, net income was around $20 billion. So they've more than doubled their net income in the past 5 months, which is incredible to see with a strong upward trend year over year. Moving on to the balance sheet, which is the financial position of a company at a point in time, we can take a look and see that the current ratio for Microsoft is beautiful, $182 billion in total current assets. Meanwhile, they only have total current liabilities of 72. So they have a current ratio greater than 2, just shows they have a huge amount of total current assets on hand to pay off all their current liabilities and continue to operate. And one thing I want to point out is that they can see here, they have total cash and short-term investments of $136 billion. Meanwhile, they only have total current liabilities of $72 billion. So you can see here, they have like $60 billion more in cash and short-term investments on hand than their total current liabilities. So they can pay off all of their total current liabilities with the cash they have on hand and still have around $60 billion left over, which is absolutely incredible. Microsoft has some of the strongest financial statements in the world right now. Very certain that this company will continue to grow long into the future. I don't see any competitors on the market right now knocking them out anytime soon. And we have to go back to this article and wrap up this video to talk about, is Microsoft the buy right now? Microsoft is a strong company. They have grown at an astounding rate, and they're actually in talks to acquire the largest social media platform in the world right now and expand into a type of market that they actually aren't in right now. Microsoft is not really heavy into social media. This would be their first big acquisition into that type of atmosphere. So if they are able to acquire the US rights to TikTok, I only see a lot of upside potential for Microsoft moving forward. Thank you for tuning in, everyone, and I will see you in tomorrow's video.